Hey, everybody, welcome to this Thursday night special. We have special guest Richard Moglen to talk about some different stocks into the end of quarter one. So obviously the first quarter has already started, but we're going to be looking at some charts into the rest of the quarter. What's looking good? What are the setups that we're kind of looking at? Richard's going to be going over three different ones. I'm going to be going over three different ones. And before we jump into that, Richard, want to thank you again for joining us. And if you could just tell everybody a little bit about yourself, how you got started trading and what you really focus on, that will kind of lay a base for what we're looking at today.
Sure. And Jake, thanks so much for having me on the show. I really appreciate it. Yeah, so how I got started in this, I'm relatively new to the game. In my junior year over at the University of Maryland, I took a class that was basically an introduction to technical analysis taught by Dr. Eric Wish and David McCandlish. And I loved it, fell in love with what he was teaching. And I ended up actually being a TA for him and helping out the next 3 semesters in a row. So I really got obsessed and really into this. And yeah, basically what he taught was a variation on the Canslim system, which I'm not super sure if everybody who is watching knows that. It basically was a system developed by William O'Neill, the founder of Investors Business Daily. And what he did is he went back in history, found the best performing stocks, the Home Depots, Cisco's, that went on huge runs of over 10,000%. And he looked for common characteristics. And all that research boiled down into the Canslim method, where you're looking for great earnings, sales growth, return on equity, supply and demand characteristics. And that's what I was basically taught through that class. And as I said, I was a TA for the next 3 semesters. And I don't have a finance background. I'm actually a mechanical engineering major. I just graduated this past spring, and now I'm heading back for my master's, and I'm doing that currently right now in engineering with a focus on machine learning. So it's pretty similar. There's definitely some kind of crossover. You're looking at the analysis of data, trends. You're building a trading system. So I think being an engineer has definitely helped me a little bit with trading, and it's been interesting to see all that different types of crossover. So that's a little bit about my background. And I also decided to start a YouTube channel last year, basically teaching what I've learned and what I continue to learn from books, seminars, and making that available to the public, because not everybody gets to go to a class at a university and get taught this stuff. And I think the more people who can become financially literate, learn how to invest and take charge of their finances, the better. So that's really what I try to do with my YouTube channel, and also what I post on Twitter. So that's kind of a brief rundown of myself. And if you have any other questions, Jake, feel free to follow up with anything.
Yeah, so one, I want to know how you got a technical analysis class. I never had that in college. That's pretty sweet.
Yeah.
It was funny because, I studied economics in college, and a lot of the time I talked to my professors about the markets, and they were not very familiar with the markets. They understood the
Right.
theory of economics and how supply and demand curves shifted and all that, but it was hard for them to apply that to the stock market. And I thought that
Right.
was always interesting. And then I think the only thing that I really had in college was just a finance class in general. And I think there was maybe a class about options, but the fact that
Right.
you had a technical analysis class is pretty sweet. And, it is interesting though, that there's so much content online these days where, you can definitely go to college and learn this, but there's so much stuff out there that you can really learn on your own. And, I think that's the beauty of this. If you're really passionate about it,
Mm-hmm.
taking a class on technical analysis may spur that passion, but you going in and really having to learn more is what really kind of gets you to the next level. So, hopefully this video helps those that are learning technical analysis and wanting to learn more. We're definitely going to be going over some different things on TrendSpider that I use and that Richard uses that may be of value to you. So, other than that, I was just going to make a quick comment about the engineering. I know a lot of engineers that are in the markets and kind of use that systematic approach to the markets and technical analysis. So it's interesting to see that overlap for a lot of engineers out there. But other than that, I think it's a great story, and I'm looking forward to seeing what you're looking at into the coming months into the end of quarter one. And let's just jump right into it and look at some charts.
Let's do it. Yeah.
Alrighty, let's get into some charts and see what Richard is looking at. Before we do that, Richard, could you tell us a little bit about what's on your chart, the indicators that you're personally using for these charts, and kind of a reason why you choose these specific indicators?
Sure. So overall, I like to keep it as simple as possible. At the beginning of when I was first learning this, I had MACDs, I had oscillators, I had you couldn't even see what was going on the chart really with everything that was going on. So overall, my main kind of setup is three moving averages, a kind of quicker one, a 10-day simple, a kind of intermediate one, 21 EMA, and then the standard 50 SMA for all the Canslim people out there. Um, and then of course I got price and volume, and I have a moving average on the volume as well. And this to me is all I need. If I could only use four indicators, moving averages and volume, that would be it. And I also have, but there's some things that help as well. So I've got the volume at price, which I think is very cool. You guys have on TrendSpider, and I've also been messing around with Brian Shannon's anchored VWAPs. I'm still learning that, so I don't have them on my chart at all times. But that's something I'm messing around with as well.
Love
Um,
it.
yeah, so I guess I'll dive in with my first stock. And I do own shares of TDOC. I don't own shares at the moment of both XP and apps, just for everybody watching. And obviously, anything, this is for educational purposes only. This is just kind of teaching my method and how I look at trading. So first up, we've got Teladoc, and I always start from both a fundamental and technical perspective. Like I said, I'm looking for the best stocks based on the O'Neill characteristics, blowout earnings, sales, estimates for the next year, institutional support. So Teladoc, if we go over the fundamentals here, it's had insane revenue growth the past 4 quarters, accelerating each time. And last quarter, sales were up 109%. And the funds over the past year has increased from 579 to 1,272. So there's funds piling into the stock. And there's also three top high quality funds based on the kind of O'Neill system. And Teladoc, if we just take a step back and go over to a monthly chart, which I think is always helpful to do, honestly, you can see it's had a monster run before this longer term base. And then you kind of have a constructive setup here. You've got a nice tail on this monthly bar, not quite an inside month here, but pretty close to that, but also with a nice tail. And then this month really it's broken out above these two highs and is now attacking the top of this base. So if we go back to a monthly chart, I'll talk about what I was looking at and where I entered. So after I saw that really nice constructive month, and then the one after it, it started getting my interest around here. And then it moved up. I didn't take it. I was in other names, but then it pulled back on below average volume against all these kind of coiled moving averages. And then there was this one day where it moved all the way down, but that had a really nice close right at basically the high. And I started my position on that day against the 200 level, see how it doesn't like to close below 199, 200. So I was willing to basically stay in the stock as long as it closed right near that level. And I started here, added some here. Then it had a bullish outside day. It took out the low, but finished really nicely. And I added on this day above this high, and then added a little bit more on this nice breakout above this level. So this is what I call, or what Mark Minervini calls a cheat entry within a base, and great volume on the breakout. That's something I definitely want to see. Then nice constructive action near the midpoint of the space, and then nice fall through today. So unfortunately, we didn't talk about it yesterday, but it's had a really nice move. For my style, I would not be entering up here. I want a level to basically be able to measure my risk against, because here you've got some tight areas. You can put your stop loss below these lows, and you know that the trade has failed if it breaks these lows. But up here, it could fall 5, 10%, 7%, and you don't yet know if it's just a pullback or if it's something more serious. So that's TDOC. And Jake, do you have any questions about how I'm watching this chart or anything?
Just other than what I mentioned before, it seems like old Kathy Wood has become a self-fulfilling prophecy these days, and I've seen that she's been loading up in this in her ARC fund. So on top of the technicals, you do have some of that self-fulfilling prophecy from just her seeming to be loading up as well. So, if we break those highs, what is that, around 250 or so?
Yeah, I think it's
It looks
253.
like this is kind of creating a next leg for the upside.
Exactly. And I mean, it's had a super uptrend before this, now a 5 month long base, and now maybe setting up for another leg into the next quarter or maybe the remainder of the year, hopefully.
Yeah,
Yeah,
one thing I was also going to mention quickly, the anchored volume by price is definitely showing a nice little launch pad there within that pennant that was
yeah,
forming over the last week or so. So, anytime you see one of those pennants or any type of consolidation after a big move, you've got your flagpole and then a flag or a pennant, and then you've got that volume supporting price. That's kind of a recipe for generally a nice launch in price.
exactly. I mean, and how I think about this type of action is there's a balance between the buying pressure and the selling pressure up here. And once all the sellers get kind of worn out, the stock, if there's a prior uptrend and all the time frames are aligned, the monthly is in a strong uptrend, the weekly is in an uptrend, daily is in an uptrend. The There's a higher probability that it goes higher. So I want to stack all the trends in my favor. I want to be above all those key moving averages. And yeah, like you said, the volume shelf here really points that out, that there's a balance here and potential support area here as well. Yeah, so that's TDOC. And next up, we've got XP. And once again, this has very strong fundamentals, at least based off how I try to look at things. It has pretty ridiculous earnings and sales numbers. Last quarter's earnings were up 767%.
Wow.
Sales were up 100%. And the estimates for the annual earnings for next year, or actually this year, I believe, is up 65% year over year. And you've got funds increasing from 57 to 233 over the past 2 years. So really strong fundamentals.
Beautiful. Now,
And
as far as
yeah, go ahead.
the what time frame is this? Is this over the last year or so?
What we're
Or
looking at the chart right here, this is like the last 6 months or so.
wow, so this thing's gone literally from $6 from the March lows to all the way to 92. So
Absolutely.
an absolute ripper of a
Yeah.
stock there. And I see that you've also anchored your volume by price kind of from that swing low there before the next leg up in November. And I
Hmm.
mean, even since November, it's over doubled from there. So I mean, this thing's not only hitting new highs, but just over the last year has just been a monster.
Definitely. And I've traded a couple times. I had a nice trade off this kind of consolidation move up. I traded it up to here, sold out around here. Didn't get back in. I'm in another kind of real estate related stock, Zillow, which is also doing pretty well. But yeah, I mean, the way I think about it, the earnings are crazy. It's got great price action. It's pretty easy to trade because it obeys these key moving averages, the 21 EMA. I mean, look, it didn't break the 21 EMA until like right here from the low. I mean, if you just want to be a trend follower, there's nothing better than a strong trend like that. So, and then it had a nice longer term consolidation, moved up, retested the high of this kind of cup shape here, and
Mhm.
now, I mean, it broke out into new all-time highs on a gap up. Not crazy volume coming in, but still pretty good price action. So how I look at things is you had, like I said, a retest of this cup here, then a move up, a gap up through the moving averages. So this would have been the first kind of potential buy point. You had a nice tail on this bar, and then a breakout above this high right here. So maybe start a half position, or however you do your position sizing, basically start a pilot position here, add on this day, and then it forms another type of pivot here where it moves up, moves down, has a really nice close on this day, even though it took out this low. Look where it closed, right at the high. And then again on this day, it had nice reversal action. I call this kind of upside reversal action. And then today it clears this pivot. It's hard to buy this breakout because it was a gap up. You kind of have to watch the first 5 minute bar and see where it's going. But ideally, I want to start my position before the breakout to all-time highs in one of these kind of lower cheat areas.
So are you looking at strength as a function of price action above the MAs? Or are you looking at all on MA crosses or anything like that as well?
I don't pay attention to the moving average crosses. Um, I I look at strength as a sustained trend, kind of what we talked about back here. I mean, right here, it's trending above all the 10-day until this one changing character day. So I
Mhm.
want my stock to trend above all those key moving averages as long as possible. And the cross, I mean, obviously it just means that the trend is going from consolidating to moving up. So that's good, but I don't use that as a signal or anything. Um, but I do like seeing the moving averages move above my cost. That just gives me more peace of mind. And it tells me that the trade is working, basically.
Makes sense. And one little hack for volume. So, for those that are using TrendSpider, one thing you will notice with the daily volume, if you're using the daily candle, it won't update until the end of
Right.
like the evening. So, Richard, if you put on the session candle, we'll get a better idea of what that volume was today, and it'll actually give us probably a bigger bar. So, if you go to that drop down menu, instead of daily, just go to session. That will actually show us what the volume likely was today because it
There you
looks,
go.
oh yeah, see, we got a nice uptick there. And that's something that will be fixed once we get the new data in. But for those that are looking for volume on the daily candle and you're like, that's weird, this was definitely a high volume day, make sure to definitely use that session candle because what it does is it takes that volume intraday and actually counts it as those intraday timeframes are closing. So it's actually showing us what that volume is looking like intraday. Where if we're using the daily candle, for some reason our data source doesn't update that until the end of the evening. So the session candle will show us a little more of that volume info. So a pretty strong move on volume today for sure.
Yeah, this is what you want to see on a breakout into all-time highs. This tells you that institutions are behind this move. I mean, regular retail traders, they don't make bars like this. This you have to have funds buying shares here, otherwise it can't really happen. And a note about the volume shelf and the volume by price. How I like choose where I anchor it. I'm trying to find significant bars or significant volume days.
Mhm.
So I might also weight this or move it over to the breakout day of the candle. But I mean,
Yep.
that's not really enough price action to really give me something substantial. You see kind of volume shelf here, but a better one for this one at least is this large volume candle, which tells you there's a lot of volume right here, some support action at the top of the cup, and then also this short-term shelf. There's some as well, and this is kind of where the art comes in with these indicators.
Yep. No, I love that you mentioned that because, there's kind of an art to anchoring the volume by price because if you did anchor it from that breakout point, we already know that range of price is so narrow that, most of the volume is going to be within that range because it hasn't traded within that much of a range. But if you anchor it from that lower point, we're now looking from what is that around 37 or let's say 40 37 to 40 bucks all the way up to 92. So we have a
Right.
much better idea of where that volume is being allocated over a bigger range rather than just saying, okay, yeah, there's a lot of volume in this range because it's like, well, it's not a very big range. It's got to be there, right? So I like that you mentioned that as well.
Yeah, definitely. All right, so moving on to my last stock. This has also been a super high octane mover in 2020, but I mean, it's got the earnings runway to keep going. So, apps, Digital Turbine. If you take a look at the fundamentals, you have earnings last quarter up 200%, sales up last quarter 116%, after tax margins up 20.4%, and there's 35% earnings estimates expected for the next year. So, yeah, like I said, those Canslim numbers, if you can see earnings growing at 100%, sales growing 100%, that's really what I key in on um, in potential opportunities. And I forgot to mention this earlier. In general, I'm trying to find disruptive companies. So companies in industries like solar, EV, telehealth, cybersecurity, software, biotech, AI, social media, stocks that are kind of changing the way we work, live, and play. That's the kind of classic Canslim saying. And yeah, these are where the disruptors really lie, and I want to be in those stocks that are changing the world and have a huge total addressable market. So that's kind of my general spiel about how I look for companies.
And I think it's important to note that, that's really important around an administrative change like we saw, this week with January 20th being the big date of kind of switching switching over to the new president here. And, those types of policies are what create these runways for these destructive companies and technologies, because a change in policy can, maybe under the Trump administration, electric vehicles aren't going to get any traction, but under Biden, there's going to be a lot more room and flexibility there. So, just a simple administration change can really kind of change the landscape as well for these types of things.
And taking a look at the apps chart, I mean, if we just go back to the monthly, we'll take a look at what a beast this has been as well. And there we go. I mean, look at this uptrend, all the way from, I don't know where the March bottoms are, right about here, $5 to $64. And you might think you've missed this run, honestly, but right now it's setting back up. It broke out into an all-time high. So for now, the trend is up, and that's really what I care about. And if we go all the way back to the beginning, you'll see that it just kind of broke out into all-time highs way back from its IPO high days. So going back to a daily chart, I'll go to the session right here so we can see all the volume. And zooming in, it formed a little base here, VCP action, volatility contraction, meaning that it decreased, moved up, decreased, and this decrease was smaller than this one, and then it gets tighter and tighter on the right-hand side, and then you're looking for a potential buy point. And here, it's a little bit messy. There's not really a clear one until perhaps this bar right here. So I'll draw in this pivot, and sure enough, that day you've got above average volume, exactly what you want to see. And now it's moved up and then pulled back again and done the same thing on maybe an even shorter time frame. And there we go. We've got another pivot right there and breakout on not enormous volume, but decent volume. And this probably is a little bit riskier than XP. I like the XP breakout a little bit more because it was kind of a more developed price pattern and higher volume on the breakout. So whatever setup I'm using, a breakout through the pivot, I want to see it within the context of an overall constructive price pattern where the volume is decreasing on below average volume, like we're seeing right here, and increasing on above average volume. That just shows you that institutions don't really want to sell the stock. And when it's moving up and breaking out to all-time highs, they're trying to get as many shares as possible. So anyway, a nice breakout here. And like I said, I'm looking for nice pullbacks and good low risk entries. This actually would have been a good one here, a cheat entry. Right there, you have a nice reversal off the lows, a good close on the day. Even though it's high red volume, I view this as a good bar because it moved down all the way here, shook all these people out who bought, definitely bought up here, and then closed. I don't know, this is probably 10% off the lows, had a nice inside day here, and then a breakout above that inside day, and also this pivot, this cheat area, and then you're off to the races. And that's a better low risk entry because you've got a cushion to work with before the true breakout into all-time highs here and also here. Yeah, so that's kind of what I'm seeing with apps. And I mean, the volume by price is also showing nice consolidation around 40 or so, and then this short-term consolidation at 58. So yeah, apps looks good. I would like to see a nice, more developed base before really piling in with a full position, but this looks good, at least in the short term.
Love it. Well, so those are your three stocks into quarter one, or the end of quarter one. And there's so many stocks. We're just talking about this that you just can't play them all. It's impossible. Right. So it's always worth finding the really high conviction ones, at least for your strategy, and just sticking with a plan. You could go and buy 50 different stocks, but it's almost impossible to focus on all of those charts and all of that price action. And honestly, there becomes a threshold where having more stocks actually hurts you rather than helps you. Even though you're diversifying risk more, you're just diversifying your concentration and not allowing yourself to focus on what's really moving. And so that's something I wanted to point out. These are three great setups into the coming month and a half, 2 months, and really just the end of quarter one. So Richard, thank you for going over these. I'm looking forward to getting your opinion on some of the ones I'm going to be going over. And let's jump into ATVI, Home Depot, and CGC. Alrighty, let's look at the 3 charts that I'm taking a look at into the end of quarter 1. As Richard mentioned before, these are not stocks that you should go buy right away. These are simply, at least for my end of things, more technical setups. Richard really focused on some of the fundamental side of things. I'm really just going to focus on the technical side of things for this particular segment. And Richard and I talked about this a couple days ago, and ATVI, the first one that we're going to go over, was one that I really liked the setup, and it's actually already made quite a move. So, I wish we would have done this video about a week ago, but all in all, ATVI is an interesting one for a couple reasons. And this is a little bit of the fundamental side, not the hard numbers though. I mean, look at someone like me. I do not play video games. I've never played video games. Maybe when I was in high school, I'd like to play Guitar Hero and like Call of Duty, like, 1 when that was when that first was a thing. But now there's like Call of Duty 97. There's like a million Call of Duty. So the reason why I bring up this is because if you look, a lot of people have been playing video games, including myself. I haven't played video games in years, and now I find myself playing Xbox Live with my friends from college. And so, the fact that, someone like myself who doesn't really delve into these types of things is actually playing these things makes me think that I'm probably not the only one doing that. And so on top of that, this was really a laggard. This thing has been lagging the overall kind of tech move and just the market in general. If you look here, the October 2018 highs were right around 84, 85. And we've just broken out of that after having this pretty big cup and handle kind of formation here on the weekly side of things. So this was a cup that was forming really for about 2 years. We had this really nice handle, just a really strong bull flag essentially. And then we finally broke out to new all-time highs. Now, the question is, when we start breaking to new all-time highs, we don't really have anything to look at, any pivot points previously, because we're hitting all-time highs. There's nothing above. So this is really when I like to bring out the fib extensions. I like to use the 1.618 extension. You'll see here that I have the extension both on the daily and the weekly side of things. So first thing that I'll point out here is this pretty much capitulation on November 9th here that we saw. And then we had this kind of this couple month area where we just could not break out of this horizontal level of resistance. And then finally we broke out on December 8th. And what I did from here is I anchored a volume weighted average price from this breakout point, because that's really when the status quo changed, right? So this is when, the breakout really started, conviction by buyers really started to happen. And you'll see as the price started to pull back a little bit after this huge run from 83 all the way up to 93, we pulled back and we really held this breakout anchored VWAP perfectly. Now, what I've done is I've created a offset here. So you'll see I have the percentage band turned on and I have a 0.5% offset. So that means that our original anchored VWAP here, so let me just get rid of this offset real quick. I'll make it 0. You'll see that this is the original anchored VWAP, and you'll see a couple times where the price did not actually test this anchored VWAP. We barely missed it, but we did not actually test it. So what I do is I come in here and add a little bit of margin of error around here, very similar to the sensitivity alerts. But what I did was I just added a 0.5% layer or band above the original one. And you'll see how well that kind of takes into account some of that price action that didn't get down to the original band. So not only did we have price really respecting this breakout anchored VWAP, but we also had this volume shelf. The volume shelf is really just an area where there's a lot of shares holding or aggregating, if you want to call it that. So what I've done is I want to see, since we capitulated on November 9th, where are a majority of the shares holding? And you'll see that a lot of shares in the point of control is down around 75. But as the price started moving up and started to consolidate here, we saw price starting to be supported by volume here, shown by this volume shelf. And the volume shelf is just really showing all of these different volume increments and where volume is holding, price increments where volume is holding. And so this really can create a base for price, especially when you have confluence between the anchored VWAP and the volume shelf. This can really act as a launch pad like it did for ATVI. So on top of that, We do have this extension. So we created this measured move from August 6th all the way down to that capitulation low on November 9th. And you'll see here that this 1.618 extension is right around 97, 98. And I say 97, 98 because, levels should always be a zone, not just one precise level. You never want to go in and just say, my stop loss or my profit taking is 97.78. Generally you want to get an idea of what's going on around an area, and then you can kind of pick your exit, maybe going into a shorter time frame. So for me, I'm not in this position. I do like to trade this on kind of larger common stock trades when the setup is there. This would have been an epic time to get in. I just missed it. Been a lot going on. Finally moved into our new house, so I'm going to have a little more time to focus on some of these things. But over the last couple of weeks, wasn't really paying attention to the markets. Completely missed this move, but it was just a great case study using that volume shelf. So let's say that you want to get an idea of where maybe you're gonna take profits around this 1.618. This is where you go in and you create a sensitivity alert, and you'll see here that I can create this zone, this buffer area, rather than being alerted right at 97.88. I'm being alerted within X amount of dollars around this line. And so then once the price triggers that alert, you have the ability to go in and see, what your actual exit is going to be, rather than just saying having a predefined exact price. On the weekly side, we do have that big cup. We've got the handle. Now, what I've done here is I've highlighted A and B as the measured move. So A is this October 2018 high. B is this February 2019 low. This is our measured move. And if we did actually continue up on the weekly side of things, the 1.618 extension for this measure move would be all the way up in the 110, the 115 zone. So, will this thing continue? It's kind of still lagging the market. So if I had to guess, I would say this is going to be a strong one into the rest of the year. But Richard, I would love your thoughts, and maybe on the chart side of things, but also on the fundamentals, if you have any feedback on that.
Yeah, right. I think gaming is a good industry group. I talked about a couple that I'm watching, but gaming, there's a lot of names working right now. You've got some kind of hardware side of things. Corsair Gaming is actually potentially going to be one of my stocks, but they just announced an offering. But yeah, you've got Unity Software, a lot of stuff basically working in this space. And ATVI breakout into all-time highs. That's the most bullish sign you can have. And yeah, it looks strong. A nice support at the volume shelf, and really 2 strong days these past 2 sessions. So it looks good from my point of view, honestly.
Yeah, one thing that I wanted to point out here, and I'm going to go into the monthly side of things here for a second. So we've had 2 really strong months here, kind of with November being kind of our bottoming point here in the flag. But what I wanted to point out here is just the seasonality side of things. So if we go to the sidebar and I pull up the seasonality side here, you'll see that, let's see, seasonality, go to done. Let's look at how ATVI has done since a few different time frames. So January of 2000, we'll see here that ATVI has a 64% win rate in January. That simply means that over the last 20 years, 64% of the time, January has closed green. That's not telling us that there's a 64% chance that January is going to close green. It's just telling us past performance. So it is interesting to see that we do have a little bit of a pullback here in February on the monthly side of things, going back 20 years. Now, remember, if we're going back 20 years, we're taking into account a lot of different cycles. If we go back since 2000, we're looking at the .com crash. We're looking at the 2008, 2009 crash. So if we did want to look more at some seasonality, maybe since the bull market started once again in, let's say, January of 2010, we can get a little bit of a better idea. And we'll see that, even since 2010, February does have a little bit of a weaker month. Now, we'll have to see how that plays out into the month ahead. But I did want to mention that even though the chart does look really strong and over time it's, looking pretty strong for continued all-time highs, there may be a little bit of a blip here in February before really going into March and April with some higher win rates here, at least over the last 10 years. So just wanted to mention that. And one thing that I did want to point out here on the weekly, let's just turn on the volume here. If I can find it, there's the volume. So the volume really is not that strong right now, at least on the weekly side of things. Now, we have only had 2 days of trading. We did this recording on January, let's say the 20th. So, you know, when we are premiering this, it will be the 21st. So just keep that in mind that we do have a short week and there's only been 2 days of price action, but still, you know, I'd want to see a little bit of a bigger volume bar here. But all in all, I mean, like Richard said, we're hitting all-time highs, strength, kind of still lagging the overall markets in tech, especially. I'm not sure if you want to call this a tech company, but it's definitely software and gaming. But overall, cup and handle breakout on the long-term side of things, multi-year breakout. Let's see what happens going into the coming months. Now, Home Depot is the next one. Home Depot is one of those ones that really is trying to figure out what the heck it wants to do. It's looking like a lot of these big cap names, Amazon, Microsoft, Home Depot, all of these charts are just kind of chopping around for the last 4 or 5 months. So if you've been trading options and you're trading leaps, you're probably getting chopped up just because of this crazy price action up and down. It's definitely been more of a trading last 4 or 5 months rather than just holding, because you'd literally be exactly at the same place you were in August that you were today. That's on January 20th. However, we are nearing this resistance above. If you guys have seen some of my other charts, I do like to use these double trend lines. So here's our solid trend line kind of highlighting wick to wick, but then we have a dashed line here kind of highlighting some of this price action that didn't necessarily get all the way down to that solid trend line, but still held a particular zone. I'm really about zones. I really don't look at precise price action. I want to look at a general area where price is respecting. So if we go ahead and turn off the volume by price, we'll be able to see this price action a little better. Over the last few days, we've really just chopped around. I mean, this has been one that has really had a hard time kind of catching a little bit of a bid here. We have had some big impulse move ups, but then we literally follow the next day on a pretty big move down. So until we break out of this, at least on the daily side of things, you know, this level around, let's say 278, 279, even around 280 would be an area where the status quo would change, meaning if we did break through and close above that, you know, we would see that buyers are definitely having a little more conviction. Now, going to the weekly side of things, let's anchor the volume by price from this capitulation point in mid-March. I don't want to say on a specific date since we're looking at the weekly, but the week of March 16th is pretty much when we capitulated. And since that point in time, we have a lot of volume holding in this general area and creating that volume shelf around the point of control. So remember, the point of control is just the biggest volume bar, but then you can see that there's a lot of other volume bars kind of supporting that point of control being an area where there's a lot of volume aggregating. Now, this is kind of going back to what Richard was talking about and what I mentioned when he was going over the anchored volume by price. If we anchored from this swing high, we don't have that big of a range to measure. We know that a majority of volume is going to hold here because the price hasn't gone really outside of that standard deviation of average true range, if you want to call it that. So what I want to do is I want to anchor it from a point where there's quite a range in price. So if we anchor it from the March lows, we were way down in the 140s. Now we're at 274. So we have quite a range that we can measure to see where volume is actually aggregating. And we'll see over the last 8 to 10 months, a majority of volume is really aggregating at this area, even though we did have quite a range that price has been trading in. So this is telling us that this could possibly be getting ready for a bigger move if we can break through that longer term resistance right around 280. I think 280 is kind of our psychological sweet spot there to break through. This is another one that I'm not in, but if I were to enter this, it would probably be on some longer term options, maybe a breakout through 280. Maybe I look at the 300 calls a couple months out. I really don't like to play less than a month, and even a month isn't giving you a lot of time to be right. So generally, I like to look out a little further, and I really don't like to look out that far out of the money because you're just going to get killed on decay. So this would be an area where I look for a breakout play, maybe through 280, and we kind of go from there. Richard, I know you mentioned Home Depot as a Canslim candidate. I guess maybe further back in the day, but any feedback on this? One thing I'll mention just from a fundamental side, I've probably gone to this damn store 200 times since we started these renovations on the house. So, you know, you may even see a line item, Jake's new renovations on Home Depot, because I've gone there so many damn times. But Richard, any other comments on your end?
Yeah, so Home Depot, when it was a Canslim candidate back when it was a kind of smaller stock growing a little bit faster. Now I would kind of classify it as an institutional favorite, meaning it's a larger cap. Its moves aren't going to be quite as significant to the upside or the downside as potentially when it was younger and had less shares in its float and all of that. But yeah, it looks good. Prior uptrend from the March lows. This is nice volume shelf. We're seeing a lot of stocks look just like this. And then we saw breakouts today from Amazon and Google
Hmm.
from this type of pattern. So um, yeah, it's setting up. My bias, because it's forming this consolidation after a nice uptrend, is that it continues to the upside. But if it does break downwards, you might want to look for that last kind of the volume shelf below this one as a potential point to pick up some shares.
Yep. And you can
If you're into that thing, there's many different ways to trade this name. So
Yeah, and it's interesting because you right where you just mentioned this next volume shelf. One, we have this volume gap where there's just not a lot of shares holding in this area. So if price did start to break down, that would kind of act as a vacuum for price to drop through pretty quickly. But if we did move back down here, remember the reason why we could probably have some type of bounce here is because if you're holding at around $250 cost average or just average in general, the price is trading at 274. So if the price breaks down back to your average or a group of shareholders average, they're probably not going to be sellers where they may be sellers when they have profit. So as the price breaks back down to where they're essentially break even, supply dries up and price can bounce simply because supply is drying up, not because buyers stepped in. And what's interesting here is the anchored VWAP from this capitulation point in mid-March is right in line with that volume shelf as well. So definitely a great point there. One thing I will do, let's just pull up Amazon and look at kind of what that looks like on the weekly side of things. Right, like you said, we've got the March capitulation, we've got this huge volume shelf, we've got this symmetrical triangle, and we're getting pretty close to breaking out. So let's see if this actually can come to fruition. One thing I will mention, since the last 10 years, only a 45% win rate for February. But remember, that doesn't really mean much. It's one variable of a ton of different variables you're looking at. You always have to look at the market conditions, just overall what's been happening over the last few months. So just because February has a 45% win rate over the last 10 years doesn't mean this goes down in February. It just tells us basic seasonality statistics that may be useful to pair with your technical analysis. So just to quickly go over that, thanks for bringing that up, Richard. Amazon is literally almost identical to Home Depot right now. CGC, this thing just has had a run and a half, and it's been fun to watch. Now, the one thing I will mention on the daily side of things, we do have this ascending wedge here where we are starting to kind of rub right along the top of this resistance zone again. And remember, this is not resistance until it proves itself as resistance. Now, we are pretty much at this area, and it has proven itself a little bit over the last couple of days that this has been an area where sellers have either come in or buying has just simply dried up. So if we don't break through this area, and you can't really attach a price to this because this is an ascending trend line. So it's a function of time, right? So if CGC absolutely ripped up tomorrow, maybe 35-30 is the area. However, if CGC does one of these things and just continues up, it may not find resistance on this ascending wedge until we get to around 40. So remember, this is a function of time. As more time goes on, these areas get higher and higher because it's an ascending line. So let's see if this breaks out. We do have a gap below. We have a couple gaps below, but definitely one from around 27 to 29. But on the weekly side of things, we've got this very strong rounded bottom. If we anchor the volume by price from this capitulation in March, you'll see that this volume shelf really acted as kind of a launch pad for price. However, we don't have a lot of volume supporting price up here yet. That can change as price evolves and time goes on. But for now, I would like to see a bigger volume shelf here. There's really no volume there aggregating since this March low. We do have a lot of people holding, however, around $16 to $20. What does that tell me? It tells me that there's a lot of people holding profit. And the more people that are holding profit, the easier it is for those people to sell, which can create these mini sell-offs until, you know, price catches a bid again. So all in all, that is one thing I'd mention. And this is one that I actually wanted to point out going into the end of quarter 1, that may be one that takes a little bit of a break. I think a lot of this, you know, new Biden administration being more lenient on marijuana, I think some of that is priced in already. Over time, I think this is creating a huge base for a potential breakout from all-time highs. But I did want to mention in February into March, you know, the seasonality goes from 71% in January to 50% in February to 17% in March. So as we move into the next 2 months, you know, the seasonality decreases. But as I mentioned before, these things are not end all be alls. They should be a variable in your equation that, you know, hopefully that equation has a lot of variables. You should never just be trading off 1 or 2 things. Price and volume are definitely something to always keep in mind, but there's also other things to keep in mind. Overall market strength, you know, relative strength of the markets. Are a lot of stocks participating in the market, or is it just a few that are pushing the market? All of these things are something to consider, and seasonality isn't always going to be able to take all those things into account because it's looking in the past. It's not looking at the current perspective and what's going on now. So all in all, January is a pretty strong month. So if we go to the monthly chart, you'll see that, you know, it's been a pretty strong month. And what's interesting is December only has a 43% win rate, and we had a pretty ugly December before moving to the upside. So 50% in February, 17% March. Let's see what happens. But overall, I don't think marijuana is going anywhere. States need to find a new way to get revenue. It seems a lot of these states are going towards legalized gambling, and you know, legalizing marijuana probably isn't the worst idea either, at least for revenue generation. So, Richard, I'll hand it off to you. What are you thinking on legal marijuana in general? Do you think we've already kind of had one of those bigger moves pricing some of this in? What are your thoughts?
Well, from what we've seen with the states who have already legalized it, I mean, it's a huge revenue boost to the states. So I think it's a growing industry. I don't know quite how the story will play out, but I think you definitely want to be looking at stocks in this space. And yeah, CGC building a nice cup shape here, building that right side of the base, definitely looks solid. And like you said, it might be a little bit extended up here in the short term, but if it forms a nice kind of intermediate base within this cup, I think that'd be a really good spot to look for an entry. And also, if you kind of want a mixture between your Home Depot option and CGC, if you could bring up GRWG, you've kind of got the Home Depot of the marijuana business. So these people are selling the hydroponic systems that allow people to grow it. And I mean, look at the run this has had. I mean, you had a nice base, which is where you want to be looking to get in. And now this is definitely short-term extended, but I mean, if this forms up another cup shape within this uptrend, I'm definitely looking to enter this one.
Yep. And I remember when Brian Shannon was telling me about this stock at like $7, and he just kept telling me picks and shovels. Right. And essentially what that means is, you know, look for these companies that are providing the tools to actually grow this. You know, marijuana is a weed. It grows pretty easily. You know, it doesn't take a rocket scientist to grow it. And so a lot of people, you know, love to go buy it from a dispensary, but there's a lot of people that like to do it themselves, know where the source, you know, what the source is, where it's coming from. And it will be interesting to see if, you know, this type of model really leads the pack moving forward. But all in all, it already has. And what I did here was I pretty much created this horizontal level from the 2018 highs, and we're really just breaking out of that over the last 2 months. So, you know, it would be healthy to get some type of pullback. I'm not really an Elliott wave guy, but if we were looking at maybe some type of wave here, maybe something like that. But, you know, that's simply just taking a wild guess. But overall, like Richard said, I think it is a little overextended. You know, a lot of people got a little frothy about marijuana in general, and this has definitely been the poster child for the legalization of marijuana. So all in all, you know, hopefully this video was helpful for everybody to get an idea of maybe some different plays into the months ahead. But please remember, these are not plays or advice to jump into. Anything that you look at that we went over needs to be looked at by you, you doing your due diligence And if that's not done, you're really just going off of our word, which, we're just going over charts and setup. So anything that you watch, and as we've gone over already, please make sure to do your own due diligence, and make the trade your own. That's something that Brian Shannon, who's a big mentor for me, always says. Make the trade your own. Your style could be completely different from Richard's style or my style, and it's just something that definitely is unique to each person. Some people can deal with a drawdown. Some people stop out after a 1% move down. Everybody's got a different way of looking at things. So, Richard, before we head out, I want to thank you so much again for being a guest. You went over some awesome stocks with some awesome statistics on the fundamental side of things. Really appreciate you going over the Canslim approach. And I'll leave it to you for last words.
Yeah, sure. Thanks so much for having me on, Jake. I really appreciate it. It's great to see what TrendSpider can do. And yeah, I think just anybody watching, make sure you guys do your own work. Find the entry setups that works for you time and time again. I think it's so important for traders to have their own rules written down that basically determine your decision making. I mean, if you don't have rules, you're kind of just doing it by feel, and you don't want to be emotional when making buy or sell decision. You want to be as objective as possible. So Jake, thanks again. If you guys want to find out more about me, feel free to visit my YouTube channel. And I don't know if Jake, you'll put my Twitter link as well down the bio, but yeah, feel free to chat with me. And hopefully we can continue to grow as traders together.
Absolutely. And for those that do like what you see using TrendSpider, we do have a 25% coupon code that will be active through the weekend. So as I mentioned, we did this recording on Wednesday, the 20th. We'll be premiering it on Thursday, the 21st. And then you guys will have a couple days to take advantage of that coupon code for those that are watching it a couple days later. So TR25 is going to be the coupon code that you can use for 25% off a monthly or a yearly plan. If you have any questions at all, please let us know. You can send us a DM just at TrendSpider on Twitter, and all that information will be in the details in the video. But you can also reach out hello@trendspider.com. Our customer success team is there to help you out, answer any questions as well. So once again, everybody, thank you so much for joining. Thank you for your time. Richard, thank you for your time and coming on and sharing some of your ideas and showing how you use TrendSpider. And hopefully everybody has a great rest of the month, and hopefully it's been a good start to 2021, and we'll see you next time.